Hello everyone, welcome back to my YouTube channel and I hope all of you are doing well. So many of you asked me about the market breadth dashboard that I shared, I think so, maybe a few weeks or maybe a month back with you guys on Twitter, and what are the parameters I look at to access the, to judge the market breadth and how the market is doing and when to get in the market, when to get out of the market, and how much cash levels should you maintain, and all of those things. Although all those things are very subjective and mostly depends on the uh, trading style of individual, right? But there are few things like in general you need to get a good idea about the overall market breadth, and your market breadth is simply like the meaning of market breadth is simple, that how the overall market is doing. Is the overall market strong, is the overall market weak, and is the overall market a kind of undecisive. And as a short term trader or as a swing trader, it's actually really useful if you know how to look at the market breadth data, and if you have a simple dashboard with you, where you can just look at few things, right? And then you can like make better decisions. That is my own opinion, right? So this is the basic market breadth sheet that I use. So there are very some very detailed market breadth sheets available. Many people have shared their own on Twitter as well, and they take so many parameters. Like if I could name one or two, uh, like one market breadth sheet, and it's a very detailed one, and it's a really good one, and that was shared by a person named Chirag Kedia. His Twitter username is Swinka Sultan, and another by its star, Tariq. If you know that guy on Twitter, right? So those are very detailed kind of a market spreadsheet. On the other hand, I use a very simple one, right? I use a very simple one. I look at just few criterias that I can show you, and I'll show you how you can build this one. I also share the link in the description, and I also show you how you can build your own, and how you can change these criteria and all of that, right? So if you see, if you start from here, you can look at few things that I use to judge the overall strength or the weakness of the market, right? So I have already made a video about the 4% scan and what is the importance of a 4% move. So if I may repeat the significance of taking a 4% move, right? As you can see here, I've taken up 4% today, down 4% today, and like how many stocks were up 4% in a particular day, and how many were down for more than 4% in a single day, right? So the significance of taking a 4% or more than 4% move is that it tells us about the kind of the range expansion that is happening. Usually when you look at most of the stocks, right, if you just look at most of the, like, maximum of the stocks, maximum number of stocks, they are not very volatile, right? So usual movement in the market is not that volatile. And if you look at any stock in consolidation or any particular time, their movement most of the time remains somewhere around 3 2 3 4 kind of percent, in that range only. Plus the more number of move plus another important point is that the more number of stocks, they are giving a more than 4% move, that could be 5%, 10%, 12%, anything more than 4%. Like this is a kind of a basic parameter that I use, right? So if the more number of stocks are giving a more than 4% move in a single day, that means the overall market, there's strength in the overall market. As you can see on 1st April, like here, if you see on 1st April, more than 800 plus stocks gave a more than 4% move. And if you look at the, just if you just simply go to your trading view, right? If you just simply look at the charts on that day, look at the overall market and how the stocks performed, and just look at the stocks in your watch list as well, or maybe the ones you are already holding, right? So as I shared earlier, so this is the actionable watch list. Like these are the stocks that I've kept in my radar, right? So if we look at some of the strong stocks, so April 1st, right? So look at this one, the Hindustan Copper gave a more than 11% move on that day. right? If you look at Hindalco, so it was kind of slow. It's a large cap, right? So if you look at the smaller and the mid caps kind of names, right? So if you look at Wabag, it was also in an uptrend. If you look at some other names as well, that usually like market showed you like there is strength, and too many stocks moved quite a lot that on that particular day. And since then, breadth has been positive, although it is kind of coming down. It's slightly coming down, right? So market has been consistently rising from last 5 7 days, right? But you can see there's a little bit of happening, like it's kind of slow, right? The number of stocks moving up more than 4% is currently coming down from last 2 3 days, means there's some sort of profit booking happening, or maybe a little bit of weakness after a good move. So you look at LT Foods as well. On 1st April, it gave a more than a 6% kind of a move. And if you look at other stock also, like G Power India, like all on 1st April also, it gave a more than like around 8% kind of a move. You look at Tata Power also gave a good move on 1st April. Even it's a large cap, and still it gave around a 3.5% kind of a move. You look at Inox India, although it tried to move up on 1st April, but it didn't move much on that day. On that, if we talk about that particular day alone, right? You look at this Policy Bazaar again came out of the range, and now it's going up. So it's a rough estimate like how the overall market is behaving that day. Because if you see, if you go back few days back, if you look at the data on the 14th March, what happened that day? If you look at the indices and we look at the small cap index, see, this is the 13th and the 14th March. Look at the look how the market fell on that particular day, right? So if you look at the number of stocks that went down, that was around 1200, more than 1200 stocks that down more than 4% down in a single day, right? That was a disaster, and it was kind of a given, right? It's not like it happened suddenly, because if you see the negative breadth was already rising. Like if you see, the number of stocks down more than 4% was already rising from last few days, and then there was this sudden fall, and then there was suddenly there was a good reversal, and after that it stabilized for some time, and then the breadth started increasing, with kind of topping out on 1st April. And since then, the very selective stocks have been going up very well across the market. Few other parameters that I use here are the number of stocks up 20% in 5 days. Again, why is it important? Because it tells you about how the stocks have been behaving from last few days. Because again, if you see, as I said, the market breadth has been rising from some time, and if you see the number of stocks up more than 20% in last 5 days, you can see they have been consistently rising. Like earlier it was 30, then 35, then 23, 53, and now currently on 4th April, that is today, that is more than 101. And if you see, the number of stocks well above the 10-day moving average, 2150 and the 200-day. So why using these particular moving averages? So these are like time frame, that depends on the time frame. So your 10-day moving average will be following the price very closely. That tells you about the very short term of the price, like in last 4 5 7 days, how the market has been behaving, right? So if there's a lot of number of stocks that are above the 10-day moving average, that means in the short term there is a good run up that is happening across the market, right? You can clearly see after the disaster on 13th and 14th April, like on 13th April, it suddenly fell to only 114 stocks were up. Sorry, 76 stocks were above the 10-day moving average. And since then, it has been consistently rising, and now it's at 1700. So it also tells you about the extremes as well. Like if it goes down so much, then there kicks in the concept of a mean reversion, like everything reverts to mean, meaning that everything reverts to averages after a very extreme reaction. That is exactly what happened in the case of the market. There was very extreme reaction on 13th and 14th when the market suddenly fell, and you can clearly see there's a extreme reaction on the upside as well. Like the market recovered really really quickly, right? Although there's still some weakness, but market recovered really really quickly. So getting to know these extremes help you to get into early into the trading positions. Because see, what happens after a sudden down move, it's not like it will happen 100% of the time, but mostly what happens, the market bounces back, right? So we got quite lucky that there was this continuation of the move. Otherwise this kind of a move was a given, right? So this bounce back after a sharp fall, that was a given, and the market could have continued downwards after that as well, but luckily we went upwards, right? So this kind of data helps you to understand the market better, and help you to get early in the trading positions and all of those things, right? So if you look at the currently, the market breadth has been rising because, again, if you see, the 21 is slightly longer term frame. If you see the use of the 21-day moving average, like how the market has been doing in a month's time. And similarly, if you look at the 50-day, that is like a 2.5 month in trading days, if you see, and your 200 days, almost like in a year. And again, another important parameters like the number of stocks hitting the 52-week high and the number of stocks hitting the 52-week low. The higher the number, the better the breadth is, and lower the number, the higher number of this, the 52-week low, that means higher the weaker the breadth, market breadth is, right? So it gives you good data. So like, another use of this data is simply whenever it goes to extreme, there is something, you can make your trading positions, you can take a small risk starting from there, right? And as it keeps on improving, you can progressive, there's something called progressive exposure. You can slowly increase the exposure to the market as the breadth keeps on improving, right? Another thing I use is that here the sectoral indices key number of which sectors, most number of stocks in which sector are doing really well, right? And if you look at the industry stocks, like, again, the sectors at 52-week high, and the number of stocks that are 52-week at the 52-week high. Again, why look at the 52-week high again? uh, that tells you that the simple logic is behind that is, it tells you about the strength, right? So there's definitely a reason. If a stock is hitting a 52-week high, means it's hitting its 1 year high or the all-time high, means there's a buyer's interest in that particular stock. That is the simple reason. If a stock is hitting continuously going up, otherwise why would a stock go up, right? Again, so you can get many names, like you can look at the sectors as well here, right? If I just look at the what are the metal stocks that are going up, right? So if you see Hindustan Copper, National Aluminium, and how many metal stocks are going up in last few days, like 1st April, as I said, overall market was really good. Since then, that has been weakening a little bit, but again, there were no down moves today, right? So if you look at the sector, like, Jindal Stainless Steel, really good one, National Aluminium, Hind Copper, right? Your Tata Steel, SAIL, and Hindustan Zinc, and many names, all of these in this sector. And if you look at the banks as well, like, as I said in a tweet, I think so 1 or 2 days back, like, the sectors to focus on are the metals, private banks, renewables, transformers, and all those kind of sectors, right? So if I look at the banks, so, right, so the data is not perfect. It's still counting some metal names for some reason, but if we can ignore them. But if you look at the banks as well, your Union Bank is near 52-week high, and your Maharashtra Bank is somewhere like a little bit close to your 52-week high. There's not much difference. You can also check the difference here, how far it is away from the 52-week high, right? And then if we come down to here, so this is the graphical representation of the percentage, that is the from the overall NSE market, that is your National Stock Exchange market. How many stocks are above the 200-day moving average, 50-day moving average, and the 20-day moving average, right? So if you go in the detail, and if you look at the overall bull run, so what you will see in a good market, in a good trending market, is that your number of stocks above the 200-day moving average should remain somewhere above the 70%. That is based on my observation. That is what I've seen in this graph. And if you look at the uh, graph from from a longer term perspective, right? So you can see it starts from the uh, September 2022, and the bull run started from the the end of the March, and you can see after that it started continuously rising, and it stayed well above the 70% throughout the bull market. And then suddenly we had, like, after the January, mid of the January, we had the weakness, and we sensed that as well. And then there was the extreme reaction in the mid of the March, and then it stabilized, and again it is starting to rise. But again, like, there is still some weakness in the market in some pockets, right? And if you look at the 50-day moving average, again, as I said earlier, that these tells you about the different time frames, how the market behave in the different time frames, right? So yeah, the number of stocks above the 200-day moving average will suddenly not go down as compared to the 50 or the 21, because of simply because of the time frame, right? So again, if you see this 50-day moving average chart, right, again, it started rising, and it started rising very fast after that, and it stayed well above the 70-80% mark. And then we had a reaction in uh, late October, and again after that started rising, and then we saw the after the January, we saw the weakness, right? So again, another important thing here to note is that when there's a sudden fall in the market like this, right, you can clearly see these will go down suddenly and they will climb up, right? So similarly, what happened after the mid March here, right, your March 13 14 after that. So in such cases, the recovery is usually the V shape kind of recovery. That is what happened here and here. But if you see, if you want to access the if you want to judge the overall weakness or the strength in the market, you can clearly see the graph was already going down slowly from the after the mid of the January. And I have tweeted that earlier as well, like there is weakness in the market, and most of you have witnessed that as well. Like February was not really good for many traders, right? And January, for some people, January was also not that good, and the March as well. But after that, the things recovered, and currently it has been going on really, like it's been going really well from last 2 weeks, right? So again, there was a V-shaped kind of a recovery, but again, we are still not up to that mark, right, yet, right? Another learning from here you can take is that whenever it reaches the extreme, it could be the upper extreme, it could be the lower extreme. So whenever it reaches the extreme, the market give a opposite reaction. Usually that is what happened, right? So if you again, if you see, it reached the extreme back in your January February 2023, it reached the extreme, like below the 20% mark, and then you see the market started recovering. And here also there was a V-shaped recovery when it suddenly fell. And again, same thing happened back in October when it reached around 30%. And again, same thing happened when it reached in this mid March, when it reached the 20%, below 20% kind of a mark. There is some bit of recovery. Same thing happens when it stays above the 80-90% kind of that level for a very long time, right? So the only time to worry is about when you see this gradual decline. That means the overall weakness is spreading across the market, right? Again, same data can be applied to the to 20-day moving average. If you apply 20-day moving average, again, that tells you about the very short term strength or the weakness of the market, right? So again, if you see the difference between the three graphs is that this one is a very linear one as compared to this one, and this one is very kind of a choppy, again, because due to the short term nature, right? But again, same thing, the same rule can be applied here. Whenever it goes to the extreme, it bounces back to the extreme again. Why I said today it's time to book some bit of profit is that, again, it is reaching the extremes. It has gone above, well above the 80%, and there's always, every single time whenever it breaches the 80% mark, you can clearly see in the data here, right? Whenever it breaches the 80% mark, you can see there's a short-term decline in the market that could stay for 2 days, 3 days, and 4 days, right? And that could hit your trailing stop losses. And if you're trailing very closely, that could hit your trailing stop losses and maybe some other positions as well. So it's better to maybe book a little bit profit, and when the market pulls back a little after the extreme, right? So then also you can maybe add more to your existing position, and maybe you can look for other stocks as well. But again, this data we need to take in account is that whenever it goes to the extreme, it can go to the lower extreme, like as and when happened on 13 and 14 March, and here as well, and here as well, right? And since then, every single time it went to extreme, there was a V-shaped kind of recovery, and every time it breached the 80% kind of mark, there was a small decline after that, right? So I will share the link of this this market breadth sheet, but there are other tools as well, and I'll show you how you can make this of your own, right? So what you have to do is just simply search Atlas Chartink. Okay, just simply search that, and the first, just click on the first link. You will get Charting Atlas, right? So other thing you'll have to do is just log in and register. If you don't have an account, you can register, and if you already have account, then you can just simply just you can simply log in and just go to the at list again, right? You'll find this option here, charting at list. So there's something called the market matrix here, right? And what you can do, there are many things that you can see here, like you have the gold nifty ratio, and those three things, the percentage about 20-day moving average, 20 50-day moving average, and the 200-day moving average. I picked them from here. And the all other things, like the percentage of number, like overall percentage of stocks hitting the 52-week high or the 52-week low, you can pick them from here. And you can check the index start from here, and 1 year average, uh, uh, how much returns a sector gave in last 1 year. You can pick that from here, right? So what you have to do is just simply go there, and you can just simply look at the data, right? Here, from here you can just simply look at the data, or you can simply just copy here and create a dashboard with your own, like just go to the that list and you can create a dashboard, right? So I'll say market breadth, right? So I can create a new dashboard, and I can just pick from all these available. I can just pick whatever I need from here, right? So as I said, I can just copy it, and I can paste it in the destination. My That is my own dashboard that I've created a new one. Again, I'll copy this one. Simply I can paste it in my dashboard, and I'll just copy this third one and I can paste it, right? So I picked these three things from here. And rest, what you can do is you just have to go to Google and you just search that market breadth charting. Okay, just search market breadth charting, and here you'll see this market breadth dashboard. Sorry, not this one. So you just have to scroll down a bit here and see, you will see this atlas market breadth, right? So what you can do here is that you can just go there, and here you will find the one that I have been using, and I have just modified it a bit, right? So I was using this one. Here I have just changed the values from 4.5% to 4%, right? And rest is all the same. Again, you can simply do it. What you can do is simply copy, right? And that will go directly to your own dashboard. And you can pick some other things as well, like there are already many things available here. Your nifty market breadth, and your this CCI weekly crossing. If somebody uses the CCI indicator, I personally don't use any of them, right? And what you can do is simply just go to your atlas dashboard and go to your dashboard that you have created. And if you want to use the 4% criteria, or the 4%, 4.5% criteria, that is up to you. Or you can just simply edit, and you can change the number here from 4.5% to 4, and minus 4.5% to 4. And here also you can simply change it to 4% up and down, right? So it's that simple. Like everything is already available, you just have to look for the things, and you just know how to use them. And I've already told you guys how you can look at this data, how you can use this whenever it moves to extreme, right? That is the time to be cautious or optimistic, right? And when there's a gradual decline or a gradual rise, right? Gradual decline, as you can clearly see, that means the overall market breadth has been weakening, and that we can see clearly from the mid of the January, right? So these are the simple things that you can use to improve your trading results. I hope you enjoyed the today's video, and if you have any questions, you can directly ask me on Twitter. You know my Twitter username, and if you guys don't know, I'll share it in the. I thought I had logged in here, but I'll share it in the description. I'll give the link of this my own dashboard in the description as well, like this market breadth by Trade Sensei. And I hope you enjoyed the video. Thank you for watching the video, and don't forget to like, subscribe, and share. Goodbye, guys. Take care.